Okay, sorry about that. The old proverbial, I sat here for an hour getting things ready, and the phone rang right at 8 o'clock. How about that? Anyways, we're going to kind of mix this up a little bit, do kind of just a dissertation on some of the early warning alerts, which are just going to be common sense things applied to candlestick analysis, and then we'll click that off and pull up the live charts to show how they're effective as far as finding signals and taking advantage of them. So again, the earlier warning alerts are nothing more than knowing what your signals look like, knowing what the patterns look like, knowing how to use the stochastics, looking for anything that can improve your probabilities of being in the right place at the right time, like moving averages, Fibonacci numbers, anything you want to throw on there that you know everybody else is using. We use the simple moving averages, the 200, the 50, the 20, and then ours is the T-line, which is the 8 exponential moving average. So what we do or what we look for is just common sense analysis that we can apply to candlestick signals. Where do we want to see the major signals? Obviously when our stochastics are in the oversold area. So what becomes our alert? Just seeing a doji in the oversold area, it should be our first common sense alert, or any candlestick signal in the oversold area. And then you can start applying other things to it, like how far away is it from the T-line? Did it support on a moving average, like the 200-day moving average? What was the reversal signal? A very strong candlestick signal. So this just tells us this is the appropriate time to be looking for a reversal. Oh, it's the cross. I don't know how to get rid of that thing. It must be. So, again, remember the candlestick analysis that the Japanese rice traders provide us is just that common sense analysis of where do most people buy. They buy exuberantly at the top. How do we see that? Because we can see the magnitude of a candle. We can see where we are in stochastics, and we can see how far away we've moved from the T-line. So if we're up here, and the reason I point this out is this was usually me before candlesticks came along. Like, oh man, I'm going to get rich. This is finally blasting off, and I'm just ready to go out and buy new golf clubs, buy a new car, all sorts of things. And then it reverses, and I'm thinking, how come I got so excited and then all of a sudden reversed? Once I realized this is what normally happens in human nature, that turned me around completely. So if we can take a look at a chart, again, 200-day simple moving average, 50-day simple moving average, the gray line, the 20-day simple moving average. And then the T-line is the black line, and the 3T line is the green line. So if we apply just simple logic, and this is what should be, this is what I kind of stress to everybody, of what is the most, most compelling aspect to candlestick analysis. Well, one, if we know the candlestick signals are the graphic depictions of human nature, and two, if we know the T-line is not a moving average that everybody uses, so if it works very effectively, it acts like a human natural support and resistance, then you apply the two together, you've got the graphic depictions of human nature, you've got a natural support and resistance level with the T-line. When you put those two together, you've got a very strong combo of how to analyze a market trend or a price trend on the same basis that you're now using the analysis with the sophistication of somebody that's been trading for 50 years. Same scenario on the downside. As soon as you're below the T-line, you can just stay short until you see that candlestick buy signal and a close above the T-line. So that makes sleeping at night much easier. If you're in a trend, you're seeing potential sell signals. I've always told people that before the T-line came along, I would get whipsawed. Not so much whipsawed. I might come out of a trade that was still a good trade had I stayed in if I had the T-line. But I would come out thinking, I can always get back in. But usually when I come out of something, I'm ready to move that money someplace else, so I never get back in. So the T-line has helped me stay in trends until I see that convincing sell signal and a close below the T-line. We have our alerts that tell us, all right, if I'm in the overbought condition and I'm seeing indecisive signals, this candle right here is more compelling to tell me this was a resistance level because it's closed back below the T-line. So when I start adding up those parameters, it makes it more convincing. Now, most of the times our alert is the signal itself, like the best friend signal gap up. That's usually our signal. But if we know that the candlestick signals have truisms, which is the further away you move away from the T-line, the higher the probability it's going to come back up and test it. And this is just great. Now my mouse is acting up. But if I'm down here and I'm that far away from the T-line and I'm starting to see possible reversal signals, the probabilities are pretty strong that if I was short, this is a good area to start taking or covering your short position, because where is it likely to move to? At least come back up and test the T-line. That simple rule, the further away you move from the T-line, that's when your 3 T-line becomes more relevant. But if you start seeing buying and here in the oversold area and you're that far away from the T-line, just an alert to start taking profits. If you're well up above the T-line on the plus side and you start seeing the sell signal, you're more diligent as far as what do we know about our simple rule of the doji. It's going to move in the direction of how they open after a doji. But if we're up here in the overbought condition, that far away from the T-line, and it opens lower the next day, what's the first thing we want to be doing? It's taking our profits. We don't have to think about it all that much. This is what kind of takes our emotions out of our trading, that if we know what should be happening based upon our simple parameters like the T-line, that we know when it's time to take profits and when it's time to get back in, just by the simple rules of what a T-line crunch should be doing. Or if we can identify the resistance level of a wedge formation or a pennant formation, we know that we can be buying here because of what happened and what type of signals we had coming up out through that level. The 3 T-line is a 3 exponential moving average. And it works more effectively the further away we move from the T-line. So if we know what should happen here, taking profits, and we know that it never closed here, we know we can be buying back here. It makes our decision-making process much more mechanical because of what would normally happen in a situation with human nature that tells us when it's time to get out and when to get back in based upon the signals or patterns. Slow curves. If we recognize that pattern, it puts us in situations where we're going to be in a high profit trade. It also tells us once we're in a trade, when should we start looking to take profits? It's when the price starts moving well above the T-line, the blue line and the gray line. The blue line is your 50-day moving average. The gray line is your 20-day simple moving average. So the T-line makes it very effective for taking profits. If we know this is where we were buying because of a fry pan bottom breakout, and that's part of knowing your patterns, and we know our simple rule that the further away you move from the T-line, the higher the probability it's going to come back and test it. When we have these big breakout moves, we can figure out strategies to tell you it's time to get out. So instead of getting out when we see a sell signal and a close back below the T-line, because that would take a heck of a lot of your profitability away. Now we know if we're up here, all we have to do is go to our 10-minute chart. And if we're way up there in the oversold area, we can be taking profits here, which would kind of equate to coming out in this area versus waiting for that big pullback. This is the message. This is the information we're looking for, is we're seeing how things are coming up to the 50. And the reason we can look at it with much more I'm trying to think of the word. We can look at it with much more conviction, confidence, is that we know what should be happening. We know what everybody else should be watching, or what they are watching. They're usually seeing what happens at a resistance level, like a moving average or a trend line. Even though we might be well up in the overbought area, if we can see it's a pattern breakout, we can start going after it. Now, this one was to illustrate, when do we start buying? Do we buy here, 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 here? Well, that's where you, again, go to your 10-minute chart, and that same information that's on your daily chart is going to be in your 10-minute chart, telling you whether the buyers or sellers are staying in control by staying above the T-line. So if we know the simple rules, that the further away you move from the T-line and you see an indecisive trading, and we know the simple rules of the doji, it's going to move in the direction of how they open after a doji, that tells us when it's time to take profits. That cuts through that emotion, and I say cuts through that emotion because that was usually me thinking, all right, I finally got a good one. This is going to be my big, big winner. I'm going to get rich. Oops. Oh, some profit taking. I don't want them to fool me out. And I'm holding on to something that's all the way back down here, and I'm selling out here thinking, what the heck was I thinking when it was up there? So whether you're analyzing the market trend or an individual stock, we have the signals. The evening star signal in the overbought area, the morning star signal in the oversold area, a morning star signal bouncing off the 200. How long does our trend last? As long as we don't see a sell signal and a close back below the T-line. Once again, the reason I'm pointing these things out is when we can start observing the obvious of where is our candlestick sell signals occurring. Gapping up, trading indecisively. Is this telling us we're in a strong uptrend? Well, if we can analyze that we're right here at the top of this trend channel, we might start thinking, all right, we better take some profits here. And let's see, I guess that was it. All right, so that's kind of a Cliff Note version of analyzing the early alerts. So what I'm going to do is I'm going to shut off the projector gem. I'm going to pull over the, let's see, yes, this session is being recorded. Gordon, we got 3 books, or I have 3 books. The one I would suggest, if you really want to get your teeth into things quickly, is the High Profit Candlestick Patterns. Then the first book that I did was back in 2001 with Wiley & Sons, is High Profit Candlestick, or Profitable Candlestick Trading. And then the third was Candlestick Profits, Eliminating Your Emotions. So so that order is book 2, book 1, then book 3. And the reason I did the emotions book was you can still be the best analyst in the world analyzing the signals and patterns, which candlestick signals make it very easy to do. You don't have to be a high-tech, sophisticated analyst if you just follow what the investor sentiment usually does. Start with profitable candlestick or high profit candlestick patterns. So let's go back. Let's start from what we usually look at is big enough. This is the Dow. This was the scoop pattern in the Dow that told us we probably had a slingshot effect, which it did. This was the resistance level, the 20,000. Now, as you can see, the relevance of 20,000. Relevance was nothing. It was just the psychological target that everybody was hoping for. I'm afraid to say that I think it was in the year 2000 or so, that everybody was waiting for it to get to the 10,000 level. Big celebrations. So the fact that they broke through this level wasn't so extreme as far as our trend analysis. The fact that we could see what was happening here was much more informative. But they gapped up through this level. So what do we essentially have? We have a wave 1, wave 2. Now we're going into wave 3. So once this psychological barrier was broken, it means absolutely nothing. What we're more interested in is what is the investor sentiment telling us, which looks like we're heading for much higher levels. And I mentioned in the chat room today that the big discussion was that I think the last 1,000 points in the Dow were the second fastest rise of 1,000 in the history of the stock market. That will become less relevant because obviously 1,000 points from 20,000 to 21,000 is a much smaller percentage than it was from 1,800 or 18,000 to 19,000. And I went back as far as saying when I was a stockbroker with Kidder Peabody back in the year 1976 to 1981, the market kept bobbing between, this was the Dow, bobbing between 750 and 1,000. And somebody said the market was going to go to 3,500, and we're thinking, what is that wacko thinking about? So the one thing I discovered about market analysis is it's pretty much going to do what you never expect it's going to do. So anyways, here is the NASDAQ. So what I want to go into is if you can be, you don't have to just kind of listen to somebody out there telling you what to look for. You can analyze the charts yourself to see, all right, there's our classic fry pan bottom. Then you kind of had a sideways wave 2. We're looking to buy this stock at 1750. This is box. If it breaks up through there, what do we have? A wave 1, wave 2, wave 3 J-hook pattern. And this mouse is just driving me to drink here tonight. Same thing with CCJ. People were kind of questioning, what should we do with CCJ? It may have lost its steam. This was yesterday. You got to take a look at the whole pattern. We're seeing another J-hook pattern. If you didn't buy down here, get ready to buy if it breaks through here because that tells us our next price move is in progress. WPZ, you'll probably see this one on the recommended list tomorrow. Wave 1, wave 2. Notice what makes up the starting of wave 3. Little hammer harami, doji, bullish confirmation of the doji, back up above the T-line. You can see this pattern setting up. So not only do the signals tell you that things are turning around, but you can see what the pattern is. This one, if this ran for apparently around, say, 33 to 41, 8 points, it means we should be looking at somewhere around the $48 area. Too late to buy, Susan? On this one, no. This one will probably be recommended tomorrow. Because we can calculate what our next price move might be. Look what happened here when it did the slow curve, broke out through this level. What did that tell us about this level? Told us there was no resistance there anymore. Coming out of a slow curve, probably in wave 3. Oh, it could change your life. Thanks, Gary. You must be watching too much of the My Pillow commercials. No, not too late to buy in this one, because what should be your anticipation on this one? This is wave 1. This is wave 2. Wave 3 should be this same magnitude. As fun, you can see the classic. There's the fry pan bottom. What do we expect coming out of a fry pan bottom? A strong price move. Pulls back, comes back up again. Where do you think our next price move will probably be? At least up here to the 200, wave 1 and wave 3 being approximately the same. Now, sometimes that may not be a huge percentage price move, but if you can calculate what your upside potential will be, then might be something where you put an option spread on to improve your probabilities. GKOS we recommended the other day because of the kicker signal. Now we're getting ready to buy it again because of the J-hook pattern setup. We recommended FCS today, FCF, because there's your J-hook pattern. Wave 1, wave 2, now you're starting back up. You could be buying today, or if it opens positive tomorrow, what do we got as a makeup? A doji sandwich, which means this day right here and this day right here will be equivalent. And what's that tell us if we move this magnitude tomorrow? But this level is not acting as a resistance anymore. How do you find your trades? Oh, Susan, there's very simple scanning techniques. And that's a whole different session. For those of you that aren't familiar with our chat rooms or our sessions, on a night like this, which is open to everybody, we try to do everything on a general basis. And then Monday night, just for members only, we do more specifics, but then there'll be even more specifics on maybe a Tuesday or Wednesday night where we do sessions on how to do the scans for trades, how to do your entry and exit strategies to improve your probabilities, how the common sense stop loss setups for candlesticks work very effectively. So we haven't done a 2-day basic training since I think November or so. We do have a training session coming up right here in February, which will be a 6-session training session on how to get your emotions or keep your emotions out of your trading, which I'm very good at teaching that because being the worst investor in the world at one time before candlesticks came along, I can tell you everything that you don't want to do and then how candlestick signals dramatically improved my trading capabilities. So again, there's your J-hook pattern. DVMT, we're buying right in this area because of the J-hook pattern. And so now we have a very simple analysis. How long do we keep this? Until we see a sell signal and a close back below the T-line. So once we know what our patterns look like, we know what should happen coming out of those patterns. We have a fry pan bottom. It is right about at this area that we want to see what happens. That's where the breakout is going to occur. So did your time in the trenches, okay, yes. But what the one common sense thing that kept coming back to me when I was learning candlesticks was, if it is around after 400 years, something's got to be working in it. And I was like most investors. I wanted to find that infallible trading method, which years ago and probably still today, I just don't receive them anymore. People would always tell you they've found the secrets of how to trade the stock markets profitably. So just pay us the money to teach you those secrets. But what I found out about candlesticks is there aren't any secrets. Everything is just common sense put into a graphic depiction. All we have to do is find out what that common sense information is telling us. Fry pan bottom, what this candle here tell us? That this level is not going to act as a resistance anymore. Yes. So as you'll notice where this broke out. If we're buying a signal, we're looking for that signal that's occurring in the oversold condition. If we're buying a pattern, we usually buy the stochastics are up here in the overbought area. That's where the breakout is usually going to occur. So that's why when you learn the candlestick signals, which are your ABCs, there's only 12 signals that you want to learn, 6 long and 6 shorts, and they're going to work effectively when your stochastics are down here. Then you've got about 6 or 8 patterns that work very effectively, and they're usually going to work great when the stochastics are usually in the overbought condition. So if you're looking at McDermott right here, that's just great. We're right about at this level. We're in a fry pan bottom. Is this time to be buying? Or today maybe, but I'd put a buy stop right up here. If it comes up through that level, it's telling me they've broken out, and now we're wave 1, wave 2, going into wave 3. Depends on your time frame that you're trading, Susan. If I'm a swing trader, so most of my trades are based off a daily chart. If you're intraday trading, you might use a combination of a 1 minute, 5 minute, 10 minute. I use the 10-minute chart as my bellwether when I'm trading soybeans or cattle or something like that, or the dollar. And depending on your time frame and how often you trade. I used to trade the E-minis off a 1 minute, 3 minute, 10-minute combination. Did very well with that. If I'm trading the dollar, I might do it a little bit slower because it's a slower moving entity, where I might use a 10-minute, 30-minute, and a daily chart combination. Yes, so candlestick signals work. Again, the definition of a candlestick signal is it's the graphic depiction of everybody buying and selling during a specific time frame. That time frame could be a daily, weekly, or monthly time frame, or a 1 minute, 5 minute, 10-minute time frame. So when we see these fry pan bottom sets, this isn't the fry pan bottom, this is a scoop. You can see your flat handle and your scoop pattern. What do we expect coming out of a scoop pattern? A strong uptrend. G-Pro was that coming out of this fry pan bottom, and notice where it broke out. The doji gap up through the 50. You can pretty much figure that everybody and their brother was watching to see what was happening at the 50. We were buying immediately after it broke out from the 50, because what was it coming out of? It was coming out of a fry pan bottom. Are you using, no, I use the T-line. The 3 T-line you just have on there because if you start moving dramatically away from the T-line, the 3 T-line becomes a little bit more fast for or more effective. What is a doji sandwich? A doji sandwich is, make this big. Whoops. Doji sandwich is a big bullish day in Amazon. The reason we recommended buying calls on Amazon was notice where the bullish engulfing signal occurred, right smack dab off the T-line. The next day it did a doji. What's our simple rule of a doji? The price is going to move in the direction of how they open it after a doji. A positive open, we're buying immediately. Why? Because the magnitude of this candle right here is usually going to be the same magnitude as this candle right here with a doji in between, thus the doji sandwiched in between these two. That becomes your doji sandwich. Now, what do we expect coming out of a doji sandwich? More upside. So if we can analyze it, we were setting up for a J-hook pattern. and then we had a doji sandwich breakout. What can we expect about this trend right here? That this trend right here and this trend right here will be the same. How long should a fry pan bottom last? It doesn't really matter, Gwen, just as long as you can visually recognize that it's a big rounding bottom that you couldn't really trade if you wanted to. We recommended buying Marriott, not a real lively stock, but probably one that if you put an option trade on, if this is wave 1, wave 3, and this is one of those adages that we use where the Japanese rice traders say, let the market tell you what the market is doing. It was telling us that they weren't closing in this steady eddy below the T line until it pulled back. Now it's done a fry pan bottom and it's back up above the T line. More than likely it's telling us it's going to stay above the T line as long or for a good while, because that's what the market told us before. We recommended IIVI the other day because notice when it gapped up, we were buying pretty quick because what was it coming out of? A fry pan bottom. What do we expect coming out of a fry pan bottom? Very strong price move. You can use the weeklies to, if I'm looking at two candlestick patterns and they look pretty much the same, I might go and say, all right, which one has a better weekly chart? Let's see if I can do this. What's my weekly chart look like? Well, you can see on the weekly chart, you've got a classic fry pan bottom, J-hook pattern. So, yes, and depending on your time frame, I'm a swing trader, so I'm usually not going to hold on to anything for any more than 2 to 10 trading days. If you're a longer-term investor, you might use a combination of a daily and weekly chart analysis. Big fry pan bottom on URI. Broke out today. What do we expect coming out of a fry pan bottom? A strong price move. What was the price trend trajectory? Up here. So that's probably where we're heading to before running into any resistance. Oh, and what else do I want to show? Cara. We got some people that are in Cara. The big fry pan bottom. Where did it break out? Gapped up right here at the level that the fry pan bottom started. What's that tell us about this trend? Probably a lot more upside. So again, this is not rocket science. This is the fact that investor sentiment works the same way time after time. If they didn't, we wouldn't be looking at these patterns hundreds of years later. Investor sentiment doesn't change. So we're keeping an eye on AERI. It's still moving up, still choppy, not anything fantastic, but if it breaks through this level, it looks like the 40, say the 4350 area, we want to be buying. That tells me that fry pan bottom is now broken out in the right direction. We also have the scoop pattern. Again, about 6 or 8 candlestick patterns that are very effective because they indicate what human nature usually does. Notice our little scoop here, kind of a flat handle, then the scoop. And what do we expect coming out of a scoop pattern? A strong slingshot effect. So we're looking for things that are setting up like a scoop pattern. Notice what happened in HEES. Flat handle. There's your scoop pattern slingshot effect. So anytime we can see something setting up like that, this is Regional Financial Corp, the scoop pattern. You're going to see the same thing right now in Goldman Sachs and JP Morgan. And what does this all imply? Just watch to see if they break through here. Gives us another slingshot effect to the upside. Now, I don't normally trade JP Morgan, Goldman. They're too slow moving. But right now, if there's a slingshot effect to the upside on these big financials, that means the market is staying strong. They're not selling selling off. So here's a little scoop pattern on HOS. And so this is what I call convergence analysis. Notice where the scoop pattern bottomed out, right smack dab off the 50. If it breaks up through this level, what do we have? Probably a slingshot effect with confirmation that the 50 was acting as support. Getting kind of that same effect here on OCN. Where's your first target? Probably coming back up into that trend channel. Pretty obvious, not pretty obvious, pretty common that when you have an uptrending, steady uptrend and it pulls back, when they turn it around, they usually bring it right back up into that trend channel again. So this all goes back to where is the obvious spot to look for an alert for a breakout. Well, you can see how they've came up today on CLD, Cloud Peak Energy, closed right smack dab at the 50. So if it opens positive tomorrow, you want to be buying. Because what's that tell us about the 50? Coming out of this pattern, it's not going to be acting as resistance. NVIDIA, we've bought calls on this because observe the obvious. You're in an uptrending channel. And we started seeing buy signals here below the, at the bottom of the trend channel. Now we're trading up above the T-line. Where do you think our next likely target is going to be? Somewhere in this uptrend. So bought the calls in here because over the next couple of weeks, if the market stays strong, this could be moving up into the 130, 135 area. So again, this isn't rocket science. This is just adding all the pieces of information of knowing what the patterns are and what the signals are that improve our probabilities of which ones are moving. Now, Apple has been in a slow, steady uptrend, but you can see the little J-hook here. So we're staying long until you see a sell signal and a close below the T-line. We've got a lot of stocks right now, like PAH. Notice where it broke out, this fry pan bottom. How long do we hold on to this one? Very simply, until you see a sell signal and a close below the T-line. With the caveat that if it's all of a sudden moved way up here, away from the T-line, then we flip to our 10-minute chart and start taking profits with the expectation it's going to come back down at least to test the T-line. Freeport I put on here because this is a perfect example of what do you want to see after a breakout. You want to see it continuing. Notice what they did yesterday. They came back and did a bearish Harami doji right about the breakout level at the lower end of that trading. So just common sense says, was this a strong indication or is this showing some weakness? Obviously it's showing some weakness. Then what is our simple rule of the doji? The price is going to move in the direction of how they open after a doji. When they open it lower today, what did that tell us about our breakout prospects? It's not there. I would have closed this one out, even though it didn't close below the T-line, because now we've got kind of a bearish flutter kicker signal. That's not a good sign. Gwen, just hang on to your individual stocks. In a few minutes, I'll tell Jim to do the double line. And when he does tonight, if you just put in one recommendation or one stock to look at, I'll look at it. Whoops. Now, again, what should be happening in an uptrend, like an IGT? Well, I understand today IGT was downgraded by Merrill Lynch. Now, does that mean the uptrend's over? No, but we can see what happened. If you're in an uptrend, notice what this looked like, a good J-hook pattern. Came up, came back to the 50, and this is part of the analysis that is very common. If it breaks through a resistance level, what does it usually do? Comes back and tests the resistance level to see if it's going to act as support. Notice our Morningstar signal took us back up. Now, if you wake up and they're gapping it down below the previous day's open, that's exactly what should not be happening if you're in an uptrend. So if you watch it and you see it come back up, that's fine and dandy. It fended off whatever news there was. If it starts coming back up, Very simply, you put your stop at the open, because if it comes back down through there, that means the gap down force is still in progress. Yes, with it closing below the T line, you're out. You can see what the trajectory of the stock is right now. It's not good. Now, was it because of Merrill Lynch downgrading it? Probably. But you get out of it and you wait to see when all that that force disappears, then you can get back in it. So not every chart is going to be a successful chart. But a major benefit of candlestick analysis is it shows you when it's not a good chart anymore, and it tells you what to do. So back to that sage advice that most money managers will give you is cut your losses short and let your profits run, that I've listened to for 40 some odd years. The only problem is very rarely will you hear a money manager tell you how you cut your losses short, let your profits run. Candlestick signals have a very simple mechanical process for doing that. So again, it keeps your emotions out of your trading. This one, GLBS, you can get ready to buy this one, because notice what happened after it broke out, pulled back right to the T line. Now remember, there is just a minuscule percentage of the people out there in the world that use the T line. So it's not like the other moving averages that act like magnets, because everybody's watching to see what happens at those levels. The T line is kind of a natural support and resistance. We see those bullish engulfing signal right on the T line. That tells you that's that natural support area. You can get ready to buy this. Al, I would guesstimate that my percentage, correct trade ratios percentage, is probably about 70%. Now, that doesn't necessarily mean that all my trades are going to be rip-roaring success. Some of them might be 0.3% positive. Others might be 300%. But the one thing that I discovered, which eventually turned my trading around, is that 70% might sound great, but what you also have to realize is that 30% of your trades are going to be losers. And if you don't work that effectively, to which candlesticks help me do quite well, is see when a trade is not working, close out immediately, and go on to a trade that has a probability of being a winner. With such big swings, would you typically avoid such a stock? Joseph, no, not necessarily, because what we're reading, it doesn't matter whether it's a big, wild, swinging stock, the signals are still going to tell you the same information. Nugget, yeah, Nugget, I've made a lot of money with Nugget. Last trade, though, was not successful, because look at the scoop pattern. And today it closed below the T line, so I closed this trade out. Now, if it comes back up, doing a J-hook pattern, I'll get back in it. Again, I'll buy it and sell it based upon the pattern that it's developing. So in the good old days, I probably wouldn't close out a bad trade, because my fear, or first of all, I don't know why it would be a bad trade, because I was so smart when I bought it that everybody else should see why it's going up. And then I'd hate to sell a trade, because what if I sold a trade and immediately would turn around and went right back up without me? Well, because we can find so many good trades, each day I can find more good trades out there than I have money to take advantage of. So if I've got one that's not working, why sit in something that you're hoping is turning around to head back up? Close it out and move on to something where your probabilities are in your favor. Are you using the 3T line? No, not necessarily. The 3T line is on the chart, but it's only there to tell me when it becomes more effective when it's moving way too far away from the T line. What is your risk ratio when you enter? The risk ratio is that any time I look at a trade, I want to see that I can make at least a 10% return off of that trade, because I've got enough that when a supply of good trades out there, that if you see a stock or a chart pattern that is very effective or a very good looking chart, but its upside potential is 6%, I want to find the one where my upside potential is 30%. Because if it's going to move, I might as well move in something that's going to produce a good profit for me. And so here's what you, whoops, that's not what I want to do. Southwest Airlines. Notice what it did today. A little doji spinning top off the 50, and then they gap it up. Probably going to be in a 45 degree off of here, the same trajectory as it was before. So I can analyze a chart and know with a high degree of probability which direction it's going to move. Same scenario on something like MGI. If this opens positive tomorrow, what's it telling me? That after coming down here to the 50, they did a doji gap up, positive trading. What do we expect after a doji? It's going to move in the direction of how they open it after a doji. Probably in wave 1, wave 2, going into wave 3. Let's see. Oh, I skipped a few. So here's one. This is what we call the bobble pattern. It failed, pulled back to the T-line area, now it's gapped up through. What usually happens on a big move like this? That's profit taking. If it opens positive the next day, you want to be buying because that pretty much tells you that the profit taking is over. It's probably going to move back up to the top of that trading range. Now, a lot of stocks seem to be bouncing higher off the 50 and other moving averages. Yes. So if you see a candlestick buy signal, that's called convergence analysis. If you see a buy signal, stochastics in the right place, and it's bouncing off or up through a moving averages, breaking through a trend, the more pieces of evidence that you can see that there's been a change of investor sentiment, the higher the probabilities you're in the right trade at the right time. Wave 1, wave 2, there's your bullish harami, there's your doji sandwich, there's your left-right combo. If it opens positive, what's it tell me about my downtrending channel? I'm probably now in wave 3. Let's see. CRC, slow curve. We're right here at the breakout. Positive open tells us we're definitely in more upside. I'm just kind of running through some charts that look good. This is what we call a belt hold signal. Notice where they opened it, right smack dab on the 50, out of the trading range, came up into the trading range. That told me they wiped out a lot of sellers here. So what do I have? A wave 1, wave 2. If it opens positive tomorrow, wave 3 should be the same magnitude as. Does your open equal market open at 8:30 Central Time, or do you wait to enter to see what the first 30 minutes do? That's part of our entry and exit strategies. If the market's opening positive and the stock that you're looking at is opening positive, it's probably a good indication that you want to be in it right away. If the market's opening positive and your stock's opening lower, buyers aren't there, you wait for it to come back up through the previous day's close. That means the buyers just opened it lower and started back up. I count the waves not on an Elliott wave basis. The prices move in waves. I usually use wave 1, wave 2, wave 3. If this moves up here, starts backing off, then this becomes wave 1, wave 2, wave 3. I'm not going to be in a stock long enough to worry about sitting back through the waves. I'm looking for what the next price move is going to be. Bob, a morning star is at the bottom of a trend. An evening star is going to be at the top of a trend. The evening star is a bearish reversal. John, I'll get to that here in a little bit. Did you buy that day? No, because at this point, it wouldn't have recognized or I wouldn't have seen it being a signal. When it came up here, now I know I've got a signal, a belt hold signal. So a lot of people say, well, how do you get ready to buy if that signal? At at the beginning of that signal. You don't. You're buying because of the signal. You're not trying to buy at the absolute bottom or sell at the absolute top. You're trying to get that high probability move in between. So here's our scoop pattern again on town. If it opens positive, what's it telling me? They've broken this level. Now we got wave 1, wave 2 with a scoop pattern slingshot effect going into wave 3. And PFPT. What do we got going on here? We can see, obviously, we got a J-hook pattern in progress. So we'd be buying on positive trading tomorrow because wave 1, wave 2, wave 3 should be the same magnitude as wave 1. How long would we hold wave 3? Until we see a sell signal and a close back below the T-line. So again, this whole process is based on that investor sentiment works the same way time after time. We're just analyzing what investor sentiment does time after time. So this is kind of analyzing that when we see something like this, if we're short and we're in the oversold area and we're starting to see a lot of indecision down here, tells us get ready to start covering your short position. Now, look what we had. We had a doji best friend gap up through the T-line, stayed up above the T-line. What's that tell us about our downtrending channel? Well, the T-line's been breached. If they open it positive, where's our next likely target? We're going to see what it does at the 50. If it breaks through the 50, then what do we look for? Wave 1, wave 2, going into wave 3. So the nice thing that we've got going for us using candlestick charts is we can see exactly what the investor sentiment is at levels that everybody else is watching. For example, we started shorting Pier 1 for 2 reasons, because the retail sector was a bearish sector, and we had sell signals and a close below the T-line, a breach of this support level. Where was our next target? The 50-day moving average. So where is it right now? Sitting right at the 50-day moving average in the oversold area. So should we be prepared? Definitely. If this opened positive tomorrow, would probably start covering my short position, telling me they're supporting on the 50. Am I in a high risk or low risk situation here as a short? Well, high risk. We're in the oversold area, and we're starting to see buy signals, support on the 50. That's telling me take your profits and go on to something that has a high probability of moving in the right direction. Okay, let's see what I have missed here. You can find, okay, yeah, our scans should be on Thinkorswim, Gary. So on December 23rd, somewhere up here. Yeah, the thing that I tell people, again, is where do most people buy? When I see things gapping up and they're getting into the overbought area, I start looking for a sell signal. If that was your bearish engulfing signal, the next day you should have been out of that trade. The 50 is the simple moving average, yes. Now hold on to the individual ones. So all right, is there any general questions on candlesticks? The first common sense element for trading is analyzing which way your general markets are moving. Right now we're suspecting we're in wave 3, which could take us up another 1,000 points. So if we can analyze it, we're probably in an upward trend. We're obviously looking for the stocks that have, or the sectors that are acting the most bullish. And those sectors right now are the banks. Because they're doing, you can see the ETF on the regional banks is a scoop pattern. What do we expect coming out of a scoop pattern? A very strong price move. So once again, the benefit of candlestick analysis is if we know what the chart patterns are telling us as far as strong price moves, it puts us in situations where instead of just holding on to a stock that might be steadily moving up during an uptrend, we can find the stocks that are going to move a lot faster during that uptrend. FCX, why did I refer? Because a bearish harami is where it opens and closes inside the previous day's trading. So that becomes a doji harami. And then because it's a doji, what do we know about the simple rule of a doji? Prices are going to move in the direction of how they open it after a doji. When they opened it lower, what did that tell us about our up move? It was pretty well gone. So I think, is it this one? Yeah, maybe this one. No. Oh, let's see. G-Pro. G-Pro makes it fairly simple. We recommended this because it's a fried pan bottom. What do we want to see tomorrow after this doji? We want to see it open positive. If it opens lower, what's that tell us about our trajectory? It's probably at least coming back down to test the T-line. What software? The charts we're looking at, unfortunately, on this chart is CQG, which is the kind of the grandfather of all charts. I use it because it's very clear as far as illustrating things, but it costs about $1,300 a month. You get the same things on Metastock, on TCNet, on Thinkorswim. There's lots of good chart, and a lot of them are feed off of CQG. KRE does the negative divergence with stochastics. What's the negative divergence? Can you get your scans on? Yes. Not only are the scans there, but I think they're already pre-formulated that you can buy all our scans that are already built in. Abe, I don't understand what the negative divergence is on your stochastics. Stochastics coming up, scoop pattern coming up. So anyways, all right. And T and TOS are your scans and their license studies. See John Carter and some others, but not sure. I think ours is just under candlesticks. TC2000, yeah, that's TCNet or Warden Brothers. Scott, yeah, the most softwares now, like Metastock, they've got their basic program, and then you can buy specific scans, the ones that you like to use on there. Okay. Is the 10-minute chart useful intraday, or do you use it intraday? Not intraday. Remember, the candlestick charts are the graphic depiction of human nature during that time frame. So at the end of the day, your 10-minute charts are worthless for the next day, because if the markets open up 14 hours later, the investor sentiment may be completely different. So you use your daily chart from day to day, and then you can use your 10-minute chart for trading intraday. Okay, I'm going to have Jim do the double line just because we're running late. Just use one ticker. Okay. Oh, man, I don't even see where Jim did the double line. But we'll start. SCR. USCR. Now, observe the obvious. There's your bearish engulfing signal. Where did it occur? Right at the breakout level. That does not bode well for a breakout. So if you were long, this opens lower tomorrow, what's it tell us about this level? They're not going through. You close out the position. Remember, the number one criteria is the signal, and then see what your patterns are. Oh, IMGN, nothing here. You're moving sideways. And with it closing below the T line, if it opens lower tomorrow, it's telling you about your trajectory. It's gone. So if I had owned this one, I would have closed it out. But then I just watch to see if it comes up through there. When it does, it tells me I've got another wave in action. American Airlines, look where you are, right there. So you've got a doji sandwich. If it opens positive tomorrow, what's it tell you about your wave count? Wave 1, wave 2, going into wave 3. So you can buy this one on positive trading tomorrow. Cork, big breakout. There's your slow curve. Where did the Morningstar signal occur? Right smack dab off the 50. What happened when it broke out through this level? Just stronger than bear's breath. So this is one where if you were watching this and you were getting ready to buy or getting ready to buy right here, you can buy with much more confidence. Do you always get big price moves like this? Definitely not. But what I've discovered through the years is that you're usually put into a position where the probabilities of being in that big price move are greatly in your favor if you just do what the charts are telling you. We're staying long on HBM. It did a bullish harami, which makes this very simple. If it probably trades back below today's low, close out the position. It's probably coming back down to test the T-line. It needs to open positive and start trading positive to stay long. But we know what our wave count is. Wave 1, wave 2, wave 3. Wave 3 should be a little bit higher yet if it's the same magnitude as this wave right here. BABA, you can see where the J-hook pattern occurred. Right now you just stay long. Notice that this has done a bearish harami. You use today's low as your stop. If it comes down through there, it's probably coming back to test the T-line. As long as it stays above the 3T line, you're in good shape. Weibo, evening star signal. If this opens lower, you're still in this slow downtrending channel. Move someplace else. CPE, get ready to buy this one, especially if it comes up through the 50, because that would tell you this whole downtrending channel has been breached. CBRL, another one that if it opens positive tomorrow, you can be buying. That tells you the profit taking's over and they're staying up above the T-line. Then you just watch to see what happens once you get up here to the Jim did do the double line. I missed it. Just watch to see what it does once it gets up to the 50. CERN, nice J-hook pattern. That one's probably got a high probability of coming up here to fill the gap right here at the 200-day moving average. STM, you've gapped up. If it starts selling off tomorrow, remember, where do most people buy? Exuberantly at the top. Start watching for your profit taking. GameStop, how does a doji at swing high top today? You're still in an uptrend. You're not in the overbought condition, but you did hit the 50, so you might be in what we call the bobble, where bobble's in between this. If you're long and it opens lower tomorrow, I'd close it out. Then I'd just be ready to buy it if it came back up through the 50, breaking this downward trend channel. Okay, where did I get turned around? CBRL, did I do that one? Yes, you want to buy on strength tomorrow. Vail. Stay long, but observe the obvious. They did a gap-up doji. Another one where I'd put a stop just below here. It needs to open positive and trade positive to keep your uptrend going. If they start trading back below the lows of the last couple of days, they'll probably come back down to test the T-line. You can always, at that point, re-enter the trade if it supports at the T-line. PKX, that's a toughie. That's an ugly-looking chart. That one would have had you out, now back in. But if you get back in, you can get back in on this one. It's just not a very good-looking chart to trade. Sunshine Heart. Nothing here to get real excited about. You can see the big whipsaws up here. You can get ready to buy this one. I suspect the volume has to be pretty good. You can buy this one on positive trading. You just observe to see what it does at the 50, but even at the 50, that would be a good percent move. INSEE, all you can do right now on this one is stay long as it doesn't close below the T-line. Again, notice what's happened. You came out of that slow curve, breakout, big move. You're in a 45 degree until you see a sell signal and a close back below the T-line. That was INSEE. All right. And CLVS, just stay long. Get this thing out of here. You can see the J-hook pattern. You can see the left-right combo off the hammer signal, the doji sandwich breakout. Very simple. You just stay long until you see a sell signal and a close below the T-line. EXEL. Oh, what the heck's going on here? This one, as you can see, you have a doji here at the end of a flat trading area. Very simple. It's going to move in the direction of how they open it. If they open this lower, you close it out. It means they're not heading up, and they're going sideways or down. So this one has to open positive tomorrow to stay in it. Otherwise, you close it out and wait for the next buy signal. Oh, man. Big bearish engulfing signal. This one should have been closed out on the close and get ready to go short. Notice your bearish left-right combo, and this also comes into that same factor as they gapped it up in an overbought condition after a doji. Very simple. You put your stop at the doji because if it comes bent down through there, you've got a sell signal. There's your left-right combo. This is not a good-looking chart. You should be out of it and getting ready to go short if it opens weaker tomorrow. DWCH, big breakout. If your volume's good, look for a 45 degree to come off of this one. And BZUN, this one needed to open positive and trade positive. You should have been out of this one today. If you didn't, it has to open positive and trade positive, but you can see you've lost your trajectory on this one. There's no buying force going on. And MTRX, that's a good-looking chart. Wouldn't be afraid to be buying and just watch to see what it does once it gets to this level. Make sure it doesn't stall out there. This, you observe the obvious. Notice what happened on this downtrending channel. Had a little kicker type signal. So this one you should have closed out today. You could always buy it back if you see a buy signal and it comes back up to this level. But pretty much tells you you're not in a good chart anymore. Eagle. Ow. You can be buying this one on positive trading. If I was buying it on positive trading tomorrow because of this fry pan bottom, just be diligent when it gets to the 200. And right now, it looks like Whiting is moving sideways until the 50 catches up. So wouldn't be long this one right now ever since your bearish engulfing signal and closed below the T-line. Still, but you watch to see what happens once it gets to the 50-day moving average. KEM also losing its trajectory. If this opens lower tomorrow, you close it out. you can always put your buy stop back up above this level, which would be created or coming up through there because of a bullish signal. You stay long on Advanced Micro as long as it doesn't close below the T line. Legacy, breakout. You can buy this one on positive trading tomorrow, telling you you've now broken out into new territory. And then just use the halfway point of this candle as your stop, because this is the candle that told you the bulls were taking control, heading for a breakout area. If they open it and close it back down here, half or more than halfway down this candle, tells you the bears are still in control and you didn't move out of this. I think we did S-Fun. This one, you probably want to be buying on positive trading tomorrow. STZ, nothing. That is a junky looking chart. I wouldn't be long or short this one. If you could look at a chart and not know what to do with it, that means go on to something else. Click, we're just staying long. You can see the big fry pan bottom. Just one criteria at this point. You stay long as it stays above the T line. Atwood should have probably, this one has to, this one has nothing. It's had nothing. And today with it closing below the T line, if you were long, you should have been out of it. You can always buy it back at 1475, knowing that it's moving up away from the T line. When do you run the scans? Like now? Usually, after the market closes, and most of the time late at night while I'm watching the news or something. There's your little scoop pattern on IMMU, another one where you just stay long. BUZI, nothing here. If you're short at some point, I'd stay short, but definitely don't want to be in this one until you see a strong reversal signal. U.S. Steel, nothing here yet, still caught in the downtrend. AK Steel, still in a definite downtrend. Micron, you can get ready to buy this one. You see where it broke out, it gapped up. Some profit taking. I would just stay long as it stays above the T line at this point. Fossil, nothing here either. If you bought this one yesterday, now notice you had a kicker signal, so it's telling you there's nothing in this trajectory. You take your money back out and move on to something else. It's much easier to take a small loss and go find a profitable trade than hope that your bad trade is going to turn into something good. ACAD, nothing. If I was buying this one, I'd put a buy stop above today's high. That would give me a Morningstar Doji sandwich breakout, which is what we call the McMuffin, morning sandwich. DGXJ, the junior golds, as you can see, gold stocks more than likely are going to come back and test the 50. Gold itself, more than likely coming back down to test the 50. That IG, did I do that right? That's not coming up. We did CERN MCIG. Is that what we were looking at? That one's not coming up. BHM. That one's not coming up. Do you know Gary's private message is blocking part of your chart? Do you know Gary's private message is blocking part of your chart? I don't know what that means. The light green line is the 3T line, 3 exponential moving average. WABA, nothing. No direction. Whoops, I didn't scroll past. Adobe. This one has to open positive and trade positive. If it opens lower, it's coming back down to the T line. Oh, Scott, we still get the overflow. CGP. This one has to open positive and trade positive. It's not a good-looking chart. This is not a reversal. When you see something move up without a signal, expect more of a bounce than a reversal. And Pfizer, stays short until you see a buy signal. All right. Do you analyze a J-hook and scoop differently if stochastics are in the overbought versus oversold? No. The number one criteria on any chart pattern is, what is the chart pattern? Now, obviously, a chart pattern is going to work better if it's in the oversold area, but we're still analyzing the pattern, and everything else is kind of a confirming indicator. So the signal is your top priority. Let's see, Vail, stop below 3T line. No, right now, the dojis, remember the dojis are your important factor. That tells you there's indecision up here in the overbought area. I'd put a sell stop just below today's low. If it comes down through there, that means they're backing it off. And why would we suspect that? Number one, because we're up here in the overbought area, and two, they gapped up and did a doji, a doji, a doji. That means there's a lot of indecision. If they don't open this positive and take it up, more than likely they're coming back to test at least the T line. Let's see. What is the fastest light gray colored moving average? The fastest, this little one is the 3 exponential moving average. Okay. Oh, we're still getting, I saw your RCI earlier. You can get ready for a 45 degree to come off of here. Look at your slow curve breakout. Going to do these real quick. 45 degree on STM. Twillo, nothing. Wouldn't be long or short this one. Did I do that right? Yeah. I'd be more apt to buy this if it came up through the 50. Yimo, nothing here. If you're short, you stay short. Carnival, another one that's going to move in the direction of how they open after the doji. If it opens lower, look for some profit taking. I think we did Baba and G-Pro, YPF. Just stay long. Another one, I'd probably use today's low. If it came down through there, they're coming back to test the T-line. Oh, I don't see what that symbol is. Is that LLN? No. LIN? No. HBM? Want to see, even though you have a bearish Harami, still haven't really even closed below the 3T line, let alone the T line. So we're watching this tomorrow. We want to see it open positive and trade positive to continue our wave 3. No, John. Mark was supposed to be here tonight, except he lost his voice. So you had the bad luck of listening to me all night long. When is a J-hook or slow curve confirmed? Usually I'm buying a J-hook anticipating that it's going to come up and test this level. It's confirmed when it breaks through that level. eBay. This is the message. The message is a big gap up, profit taking. But the message was they gapped this up huge. Now we wait for the profit taking to be over, which is maybe a doji, a hammer, and then when you start seeing the buy, and then you can start buying. When do you use the 3T line? When your price moves way away from the T line. And we recommended OCLR today based upon if it opened positive, have a doji sandwich breakout. But it didn't confirm because it opened and immediately sold off. However, notice what it did. It came back up above the 3T line. So we're still going to be a buyer of this above yesterday's high because that tells me they are in the breakout mode. Okay, I think we got most everybody. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. All right, we'll see you then.